Welcome to today's webisode, where we are talking about navigating PPP forgiveness. I'm joined by Jason Mole, a CPA, tax manager for month end. He will introduce himself here momentarily, but today we're going to be talking all about Paycheck Protection Program as we approach the very first edge of forgiveness for those loans. We're going to try and provide a little bit of high-level detail today. Hopefully also provide some additional content in the agenda or the webisode notes. And if you ever have any questions, don't hesitate to reach out to either of us. Just a little forewarning for those that are listening. We're recording this on the afternoon of June 23rd. So if there's been any information that's come out between now and the time that you are listening to this, we apologize that we do not have that content readily available for us today. If we at any point talk about last week or in recent days, we're referencing Tuesday, June 23rd. So with that, let's go ahead and get it kicked off. Like I said, I'm being joined by Jason Mole from Month End. My name is Nick Kaniski. I'm the Director of Corporate Counsel at Buildertrend. And Jason, why don't you tell us a little bit about what you do, a little bit about Month End, and kind of give us a general synopsis there.
Sure. So yeah, like you said, my name is Jason Mall. I'm a CPA. I'm also an enrolled agent, and I pretty much handle all the tax matters at month end. Month end mission statement is pretty simple, really. We're an accounting firm. We do accounting, bookkeeping, and tax work exclusively for Buildertrend clients. Our founder actually spent over a decade in the construction and building industry. And coming out of that, he started an accounting firm to specifically service that industry. And so that's what we do. We're specifically for Buildertrend clients.
Excellent. Yeah. And I know we've had the opportunity to work with you guys quite a bit over the past couple of months, and it's been largely successful. And it's great getting to meet you as well, Jason. Excited to see where this goes. And yeah. You guys are going to have some really timely advice. I know, just before we hopped on, we were talking a little bit about where we're at with the stages of forgiveness. So stay tuned towards the end of this webinar where we give you kind of an update on where we stand today. So without further ado, today's agenda, like I said at the outset, our goal today is going to be to provide you with the latest information, not only from the Small Business Association, but also the Treasury Department on where we stand with the Paycheck Protection Program. Our goal here is to maximize forgiveness for you and be able to arm you with as much information as possible so that when you go to your lender, you're able to have some answers already ready for when they're asking you questions. When this whole entire process started, it was obvious that there just wasn't enough information, not only from the government, but also from lenders. Everybody was flying by the seat of their pants as we went, and everybody was scrambling. And unfortunately, we did the best that we were able to do to provide some high-level details, but there are so many nuanced situations for so many people out there that we want to at least give you a basic understanding of where the program has been and where it's going, so that you're able to approach forgiveness as at least somebody with some degree of education. Because I know, Jason, you might be able to speak a little bit better to this. You're hearing from clients right now, generally speaking, what's the general sentiment as we approach forgiveness?
Yeah, so this is a topic that's particularly difficult because, usually when a small business owner or a person comes to a CPA or another tax professional, we have years of experience and just lots of experience handling the situations that most people are experiencing. But this program obviously was created specifically in response to the pandemic that we're facing. And so as this started to roll out, we knew just about as much as the clients did, that were asking us for guidance. And it still feels a little bit that way. Obviously, this kind of second round that we've seen here, the new PPP FA, has shed a lot of light and corrected some issues in the initial legislation, and then also with the new interim final rules from the SBA coming out. That helped a lot as well. But ultimately, a lot of this stuff is we're just kind of building the plane as we fly it, figuring things out with clients rather than kind of giving concrete definitive guidance to clients. We're kind of walking through it together. But by and large, PPP, in my opinion, other people might have different opinions, but in my opinion, PPP was created, to keep people out of the unemployment system, right? This pandemic happened and kind of shut everything down. And I think it was a way for the government to inject cash into businesses to keep everybody from, losing their jobs and overflooding the unemployment system, which also kind of happened a little bit. But by and large, it kind of started out a little rocky, the PPP program, but I feel like with this new legislation, it's ended up working out pretty well. And we'll, obviously talk a little bit more about kind of those changes that happened, but that's kind of just a rough overview of what we're looking at.
Yeah, I think that's a great segue into our agenda today. So we're going to start off giving you a little refresher on the relevant terms, some of the major pieces of the legislation, which hopefully will set up as we're referencing those throughout the rest of the webisode, just to provide some basic backgrounds there. If this is kind of your first introduction into the PPP, and like I said, we're recording this on June 23rd, there's still a week left to go out and apply for a loan. But if you are new to the entire Paycheck Protection Program, I highly encourage you to go check out our first webisode on this topic. That should be available on our COVID-19 page. I was joined by Chris Anderson from Month End, where we ran through some of the generalities. Obviously, a lot has changed since that time. But if you're just completely new to this, I highly encourage you to do that. So from there, we're going to go into recent guidance evolutions of the program, including, as Jason just mentioned, the Flexibility Act, look at what's been changed there, some of the updates on that front, and then, really segueing into a full preparation course for forgiveness and identifying the correct forgiveness application, and also, giving you or outlining the exact documentation that you're going to need as you contact your lender for the first time to seek forgiveness. And then finally, Jason's going to give us a couple anecdotes of where he's been today, what he's heard from the initial individuals seeking to apply for forgiveness, and if there's been any success. And, fingers crossed that there will be over the coming weeks, and that everybody listening to this will have no problem maximizing their forgiveness and having that full amount granted to you. So with that, I want to move into our PPP refresher. So two main terms to keep in mind here. First and foremost, the relevant time frame, which is the covered period. I remember when this law first came out, they had no reference whatsoever of what exactly this 8-week time frame was going to be called. They defined it as the 8 weeks from the front end of when you apply for the loan to the back end, and everybody was like, all right, well, what does that mean? And excuse me, it really kind of took some time for not only the government to flush out what that meant, but also for individuals like yourself and myself to really identify what is this covered period. And the best way that I've figured out how to explain this is graphically, unfortunately. But either way, the goal here is that from the origination date, which is the date that you receive your loan amount, and extend that for 8 weeks out, and we're going to call that the review date, which is going to be the time that the clock essentially stops ticking. For those 8 weeks, you are supposed to freeze your payroll. That's the federal government's way of taking control of the number of employees that you had, and to Jason's point, to avoid the unemployment circle that we have seen continue to grow, and that pool continue to grow. We've had massive rates of unemployment, and fortunately, I think the PPP did quite a bit to preserve some of that unemployment, at least, right?
Right.
So generally speaking, that's the period that we're concerned about, and we'll get to here in a second how that has actually been extended to 24 weeks in certain cases, but nonetheless, 8 weeks is what we're looking at right now. As I mentioned, the application deadline for PPP loans is going to be June 30th. That's a week from today. And then at the end of this year, the program is going to close. So your review date has to have hit before then. Now, that doesn't mean you have to have applied for forgiveness by December 31st, but that's the last date that you are going to be eligible for a loan. Now, that might change here at some point. We're still waiting to see from Congress. I know they're already talking about a fourth stimulus package. We'll see where that ends up heading. But as we stand today, that's where we're at. That brings us into eligible expenses. So obviously on the front end, we were really worried about what was eligible to include for the full loan amount. And it was all focused on this 2.5 times your payroll. Now, as we move towards forgiveness, the whole topic is going to be centered around are you able to spend that money on, and did you spend it correctly? So looking at the expenses that are eligible for forgiveness, we first look at payroll costs. So that's going to be the total compensation during the covered period. That includes salaries and wages, health benefits, retirement benefits, any amount of money paid towards that. Now, there is an exception there, and that's going to be any salary compensation over $100,000 is going to be excluded. So let's say, for instance, you have an employee making $150K, only 100 of that is going to be included in eligible payroll costs. From there, we're going to be looking at non-payroll expenses. We'll get into this split here in a second, but that's going to be things like your mortgages or your mortgage obligations, any rent payments or leases for an office space, and then any utility payments, electrical bills, gas bills, water bills, things like that relate to your business, and those obligations would have been needed to be incurred before February 15th. So as an example, you couldn't have gone out and signed a new lease for an office in May and attempted to use that as an eligible expense for your PPP loan. Anything that I might have missed there, Jason?
No, that was great.
All right, excellent. So with that all said, hopefully a basic background, we'll get into some recent updates on the PPP. Win and timeline view here, and not all of these are as relevant as others. However, some of the main things over the past month or so, first and foremost, the Paycheck Protection Flexibility Act was signed into law. We'll run through the provisions of that here momentarily, but that was essentially the government's second hack at developing this piece of legislation. As we talked about earlier, we were kind of, as Jason said, building the plane as we flew it. And this was some additional pieces provided to enable us to keep it in flight. From there, on June 16th, the SBA released the forgiveness applications, and I say applications because there are actually two versions, a full application as well as an easy application. And we'll look at that here momentarily as well, give you a couple factors to consider as you're deciding the appropriate application for you. On June 19th, the Treasury, after some significant back and forth and a lot of politicking over the past couple of months, the Treasury formally announced that it is going to publicize Paycheck Protection Program recipient information. So what does this mean? Anybody who received over, and correct me if I'm wrong here on the threshold, Jason, I believe it's $150,000 through the Paycheck Protection Program, is going to have their name, their business information, including their address, NAICS code, which is essentially an industry designation, and then the loan amount, as well as number of employees on some publicly accessible database. We have no idea what that's going to look like at this time. Obviously, that's going to be pretty extensive because the percentage of recipients over $150,000, I believe, is something like at least 3/4. I don't know if you have any more insight into that, Jason, but
I don't. I hadn't heard that, but I believe it.
Yeah, either way, it's going to be a fairly extensive list.
Right.
It's going to be interesting to see where that goes. I'm sure, a lot of the political rhetoric is going to continue to persist around these larger corporations. So hopefully none of our viewers have to worry about this. Instead, that's going to be solely focused on public entities, things like that. Like I've said before, June 30th, the deadline to apply for the PPP loan. If you haven't gotten your application in yet, highly encourage you to reach out to a lender. I know the SBA has a fantastic tool that they just unveiled either this week or last week called Lender Match. You answer a couple questions about your business, and they actually reach out to smaller SBA eligible lenders, and will connect you to them based on your business. So hopefully that allows access or provides access to some smaller lenders, some neighborhood type entities that will really be able to, that you'll be able to leverage as you work your way through the PPP process. Finally, what we're expecting down the road, as I mentioned, fourth COVID-related stimulus package. which hopefully will include another round of PPP style loans for those businesses who have been affected. So let's say, for instance, a stay-at-home order obligated you and your employees to turn home from the job site or temporarily delay any further project progress. In this case, hopefully another round of PPP loans will help you through that situation. Anything else there, Jason? What else are you hearing out there?
That was a pretty good overview. The only thing I would say is, on that last point, the only potential legislation that I've heard about, additional legislation, and I am reading that it's being kicked around. The number I read was they're considering creating some sort of stimulus package for additional PPP funds. I think specifically for businesses that have seen a decrease of 50% or more of their revenue.
Okay.
That's what I saw. Obviously, there's nothing on paper yet, or at least it hasn't been pushed through Congress. So nothing out on additional PPP funds yet, but it looks like it is going to be, maybe more so for what it was initially targeted for, businesses that were really specifically hit pretty hard, but we'll see.
Right. And I know there's still roughly $100 million left in the PPP loan program today.
Right.
So plenty of money still out there, which is shocking considering how quick the first round went. The second round has really kind of turned into a drip rather than a waterfall. So
right.
Again, if you haven't applied yet, highly encourage you to go out there, do that today, see what you can access. Even if you don't think you're eligible, it's worth a shot. Given the amount of money that's out there, I'm sure lenders are still taking applications, and they'd be happy to work with you. So with that, brings us to the Paycheck Protection Flexibility Act. Like I said, this was passed on June 5th, which then created a June 5 threshold for a number of their changes. Essentially, they distinguished loans that were approved prior to 6/5 are treated one way, and loans approved after 6/5 are treated another way. The most important piece of this, and Jason, I look forward to hearing some factors to consider here as it relates to this extended covered period. Like I said, loans after 6/5 are going to receive a 24-week covered period. So if you remember, we went back, I was talking all about this 8 weeks where they're attempting to control where the government is attempting to control your employee base. That has been extended to 24 weeks, which is a significantly longer period. For loans prior to 6/5, the borrower can actually decide whether to use the 8-week or 24-week covered period. And Jason, what should people be considering when they're deciding whether or not to use the 8-week or the 24-week period?
Yeah, that's a great question. And, in researching this, I've been having a hard time finding, why somebody would actually want to stick with the 8-week covered period. Well, to start, I'll tell you, it's not really an election that you need to make, in the sense that, you don't need to inform your lender or anybody, I choose the 8-week or I choose the 24-week. It's something that's going to be disclosed on the application for forgiveness. So you'll just basically tell them, if you used an 8 or a 24-week period. But I'll tell you that the significant majority of people are going to want the 24-week covered period. And that specifically is because the 24-week period allows for more funds to be paid out and forgiven. The issue we were having before was, the PPP loan was based off of 2.5 times your monthly average payroll, and the forgiveness was 8 out of 52 weeks. So there was obviously a section there for people that didn't have things like rent or mortgage utilities, that they weren't going to be able to, fully deduct their PPP loan. The 24-week covered period solves that pretty much. So one of the biggest things to note is the 24-week period. The $100,000 limit per employee is still applicable, or $100,000 per employee. The 24-week period will extend that. So essentially, I don't have the exact number, but you would be able to get up to roughly about $46,000 of payroll forgiven for an employee. Important thing to note, though, is for owners of the business, if they're on legitimate payroll, It's going to be capped at the 20,833, similar to like a single member LLC or a sole proprietorship. So the calculation is a little bit different between, an owner versus just a regular employee. But by and large, I would say the only two reasons somebody might choose the 8-week covered period is if either they had relatively low amount of payroll, either themselves or their employees aren't anywhere near the $100,000 mark, or, well, I guess there's a third. The third or the second would be if you just want to get your loan forgiven sooner, the portion of it that would be forgivable, in all likelihood, they're going to make you wait until the end of your covered period to apply. So if you're just really anxious to get a chunk of it forgiven, you're going to obviously go with 8 weeks. Beyond that, you may choose to do an 8-week period if you have some sort of financing or something that's holding you up with the bank. If you need additional loans or something like that, and the bank is hesitant to give you money because your PPP is up in the air, they don't know how much is going to be forgiven. You may elect to just, hey, I'm going to take 8 weeks. I'm going to get forgiveness so that I can move on with my life. But for the most part, kind of waiting out the 24-week period is going to be the best bet for most.
That's really interesting. And, you had touched on the owner-operator aspect there briefly. I was actually trying to read something earlier today, speaking on, owner-employees of S Corps and C Corps, and kind of the confusion and the nuanced explanation that the SBA continues to provide on this aspect. Yeah. I will say, if you're in that situation, and I know a lot of our clientele is, an owner-operator or an owner of a smaller corporation, highly recommend reaching out to a CPA, making sure that you're able to maximize that. Jason, I know you and your team, this is your bread and butter right here, right? Is Buildertrend clients. And, if you have some questions on that side, I couldn't recommend more reaching out to you guys and making sure you're taking the right steps so you're getting as much back as you can. And granted, this isn't an all or nothing prospect where, if you don't hit a certain threshold, you're not getting anything back. You can still get something, but we want to make sure all of our clients are able to get 100% of what they're deserving of. And if that means, answering a couple, confusing questions regarding your ownership status, it's a no-brainer to reach out to you guys.
Definitely.
So moving on to the next change, the Flexibility Act also extended the maturity for these loans. So let's say you didn't get your amount forgiven, and for whatever reason, you either decided not to seek forgiveness, or you didn't go through the necessary eligible expenses for the loan. Keep in mind, this is still a low interest loan, and it's still extremely conducive terms to a borrower. And with this Flexibility Act, loans after 6/5, it actually extended the maturity date of the loan from 2 to 5 years. And if I remember correctly, it was only at like 2 or 3%, correct?
PPP, I believe, is at 1%.
Oh, wow. Yeah. So you're going to have, instead of 2 years to pay that back, you're going to have 5 years to pay that back, which provides even greater liquidity for those that are ultimately just seeking to borrow this money rather than forgive it. For those loans that are prior to 6/5, you can extend that maturity date if you and your lender mutually agree. I have not heard anybody reaching out up to this point to their lender to try and extend that, because I'm assuming most people are seeking forgiveness. But if it comes to the point where either you didn't have the full amount forgiven, you're not seeking forgiveness, try to reach out to your lender, get that maturity date changed from 2 to 5 years, provide yourself a little bit of flexibility. Am I right?
Yeah, I mean, unless, for the most part, if people are going to get most of it forgiven, you may as well just, either pay off the rest or extend it. The big thing, and it's kind of going to be, in my opinion, going to be this way for most aspects of the PPP program, but, ultimately it's going to be up to your bank, for those loans before 6/5, if they'll even play ball with you on that. But if you do want to ride the loan out, it's worth it to ask for that extension for sure.
Gotcha. Okay. Excellent. Another change, reduce the payroll threshold. So you actually mentioned this earlier, where it was the 2.5 times your average monthly payroll. And then there's only 8 weeks where you have to spend that money. The idea there was that extra 20% was supposed to go to other expenses. Whether that was your mortgage, your rent, whatever, and maybe not supposed to go there, but you were allowed to put it towards that. So that was kind of like a bumper zone. And we, I know there were some clients that were, maybe not clients, but some borrowers that, had a couple of qualms with that, saying that they wanted more flexibility. Say they had payroll issues related to employees leaving and not coming back, things like that. They had high rent. So with the Flexibility Act, they actually lowered the threshold for eligible expenses from 75% down to 60%, and that applies to all loans, regardless of whether it was before or after 6/5. And like I said earlier, it's not an all or nothing proposition. Even if you don't reach that 60% threshold on payroll expenses, you can still obtain partial forgiveness. So quite a bit of flexibility there, hence the name of the act, but should provide some opportunity for you. And then finally, they extended the remediation date for if there was a case where you laid off employees. Previously, you only had until June 30th to rehire those employees to maximize your forgiveness. Now, they're saying that you have until December 31st, 2020 to rehire and return your payroll to the previous levels, which, hopefully not too many of our listeners had to go through that experience. But if you did, you have a little bit of extra time. Use that, really see what the labor market looks like, because I know it's hot right now. Obviously, a number of people are out of work. So to return those payroll levels to where they were before, you still have 6 months. All right, this brings us to the forgiveness application, and this is what everybody's looking at right now. The SBA just released these last week. I sat down with them, I know the other day, tried to make my way through. I will say the easy form is significantly easier, but there were two forms of this application. So there's the easy form, just like you'd see on your taxes, and then there's the full form. The benefit, obviously, the easy application is much easier. It requires fewer calculations and less documentation for eligible borrowers. If you are eligible for the easy form, I highly encourage you to use it. Now, I will say documentation is not radically different between the two, but instead of having to provide a full list of your employees and employee by employee salaries and things like that, the easy application just allows you to say, yeah, I have the same number of employees as I did before. Here's what I spent it on. Here are my tax forms, so on and so forth, and we'll get to those momentarily. But to be eligible for that easy application, you must meet one of the following. Number one, you are self-employed, don't have any employees. So if you're a one-man shop, it's just you as a GC, or maybe we have a subcontractor listening and it's just them comprising their entire business, you're automatically eligible for the easy application. Number two, if you did not reduce your employees' hours or did not reduce their salaries or wages by more than 25%, you're eligible. So if your payroll today looks exactly like it did in the spring, then you would be eligible for the easy application. Now, I would imagine this is going to be the route that a number of our viewers are going to pursue if they are eligible for the easy form. Again, fairly simple. If it looks like it did, if payroll looks like it does, like it did in the spring today, you're eligible right there. And then three, if you experienced any reductions in business as a result of health directives related to COVID-19 and you did not reduce the salaries or wages of your employees more than 25%, similar, you are eligible in that aspect. So if for whatever reason there was a stay-at-home order that was affecting you, you were deemed a non-essential business that you had to halt all job site progress, had to lay off employees as a result, this would be another form on that side. Again, the easiest way to think about it, company looks like it did in March, use the easy application. Am I missing anything there, Jason?
No, honestly, I would just add, the easiest way to fill out these forms is to hire somebody to do it for you. Not to plug ourselves in that way, but I think the biggest issue that we're going to see with the PPP program is people that tried to DIY their applications and put the wrong amount of funds that they qualified for. And I imagine the same thing is going to happen on the back end. So I would definitely, not try to DIY it. Probably wouldn't even do the easy form yourself. So, and actually, I'll add one other thing too. It's important to note this. I read in the SBA interim final rules that for the full-time employee calculation, they are going to use the earlier of the date of the application for forgiveness, or December 31st, 2020. So if you have employees that you are, if you kept the same amount of employees, you're fine, right? Just apply. But if you are either, rehiring, laying off, whatever, you want to make sure that when you are ready to get forgiveness and apply, you don't lay anybody off before you apply for forgiveness. As soon as your covered period is over, you need to apply for forgiveness right away to lock in, the full-time employees that you have on that date.
That's a really good point. And I guess that goes a little bit back to the extended time frame of the Flexibility Act, where they moved it from June 30th to December 30th. So
right.
You have a little bit more flexibility there, some optionality. You determine what's best for your business, but returning that head count to where it was prior is going to be the key to maximizing forgiveness, right? And also using the easy application.
Right.
Excellent. So with that, and I guess to your earlier point where you were saying, highly recommend reaching out to a CPA. It's just like doing your taxes. I don't know if I would sit down and try to do my taxes myself. So same rule applies here. While the easy application might look fairly intuitive, there's still a number of calculations that go into that. You want to make sure you get those right. There's no reason to leave money on the table or have to provide, do some runaround with the SBA or the Treasury Department because you missed a number on the application. So it's a no-brainer to reach out to a CPA, have them do this, walk you through, collect all the necessary documentation, and away you go. So as we bring you to that, navigating forgiveness, and right in line with reaching out to a CPA, you're going to want to prepare documentation. And this is stuff that you should have ready to go when you walk into either your lender's office, your CPA's office, whoever it might be, and you're saying, all right, here it is. This is exactly what I use to determine not only my eligibility amount on the front end, but what I believe is the full forgiveness amount on the back end. So first and foremost, you're going to want to evidence your payroll expenses. Now, this is only during your covered period. So either those 8 weeks, if that's the option that you're going to use, or as Jason said, recommend using the 24. Over the course of those 6 months, you're going to want to provide bank account statements or payroll reports documenting the amount of cash compensation that was paid to your employees. I put this note at the bottom, but if you use a payroll service such as an ADP, I believe Gusto does something similar to this. The documentation should be easy to find there. You should be able to click around, press print, away you go. As well as tax forms from the covered period. So your payroll tax filings that you're going to file with the IRS, these come on Form 941. So if you have any familiarity with doing that, pull those yourself, or if you use a CPA or an accountant traditionally, they should know exactly what you're talking about. And your state quarterly business and individual employee wage reporting and unemployment insurance tax filings. So these similarly documents that you're going to send to your state, just like the federal payroll tax filings, state version should be either obtainable through your accountant or through your ADP software. And finally, payment receipts or account statements documenting the amount of contributions to employee health insurance and retirement plans. Like I said, and the eligible expenses when it comes to your employees is not only salaries and wages, but also amounts paid to things like 401ks, health insurance offerings, anything like that. If you've made payments during the covered period, go ahead and print those out because, goal is going to be, hey, we want to hit the full amount of forgiveness. As much as you can provide on that end, the better. So, and that brings us to non-payroll expenses. Again, this is obligations that were incurred prior to February 15th. What does that mean is, like I said earlier, you couldn't have gone out and gotten a new lease in May and tried to use that as an eligible expense for PPP forgiveness. But if you have, any kind of utility payments, lease obligations, mortgage obligations prior to February 15th, if you've been paying those over the covered period, you can use those. And it's fairly simple for each and every single one of these. either canceled checks or simply amortization schedules, lease agreements, some kind of documentation verifying the eligible payments during the covered period. Now, again, that's only either the 8 weeks or the 24 weeks, but go ahead and produce that stuff, have it ready to go, bring it to your lender or your accountant and say, here it is all in one folder. Make it really, really easy on yourself. Am I right?
Yes, definitely.
All right. And that brings us to finally, Jason, I know this is what everybody kind of wants to hear right now. Anecdotally, what are you hearing from forgiveness? And again, this is June 23rd. We're just starting here. The very first batch of eligible loans is just coming to time now. And again, this would only be on the 8-week standard versus the 24-week standard. But give us a little insight into that.
Yeah. Tales of forgiveness. The tale right now is we're not quite there. So actually, in anticipation for this this webinar that we're doing, I tried to push a couple through, a couple applications for people that I thought would be just fine with the 8-week period, and a couple banks. I won't say which ones. Some of them are local, a couple larger ones, but for the most part, they said we're just not ready yet. Because obviously as CPAs, we did a bunch of these applications. The application process was highly nuanced between the different banks. Okay, so the actual PPP application, it was very rare when we were applying for the PPP loans that we actually filled out the PPP application. Every bank kind of had their own process for collecting data from clients. And the general feedback that I got when I went to go apply for forgiveness was that they're doing the same thing on the back end. They're setting up their own, whether it's a Google Sheet or their own portal to go through and collect information from the clients to process the forgiveness. So that's not to say that you're not going to have to touch one of the application forms. I imagine some banks are going to say, just send us, the application for forgiveness. But for the most part, what I've gathered so far is most banks are going to have their system for collecting the information from you and then turning around and, perhaps filling out that application to send to the SBA to get approval for the forgiveness. But that's what I'm seeing so far. I haven't been able to get anything through, and quite frankly, like we talked about earlier, most people are going to want that 24-week period anyway. And, really the only people that might be able to apply before the 24-week period is over would be, general contractors, sole proprietors that kind of advance their payments. But the general vibe that we're getting is they're going to make you wait for that 24-week period anyway. So, the best thing you can do now, if you're not already, especially if you're going to go out and get a loan now, is just to make sure that proactively you are creating those records that we just told you need to have for forgiveness, making sure that everything is super well documented. And again, I would plan to give that to a CPA or another tax professional to help you apply for forgiveness. All those pieces of information, documentation that we just told you to get together for the bank, get them together for your CPA, for your tax accountant, and just be ready when the gates open.
That's really fascinating. Yeah, I think it goes to show, what you were mentioning on the differing applications goes to show just where we were at the beginning of this entire thing. There was no real advice to lenders. Nobody really had a clue what was going on. Everybody was just going about it as quickly as they possibly could to try and get money in the hands of the individuals who needed it.
Right.
So that's certainly interesting. And also from the 8-week to the 24-week, do you feel like lenders are just kind of punting right now, or there really isn't the need?
Yeah. So I think obviously they are punting, right? They're doing it because, first of all, I really think they're trying to get some sort of system in place so that they can handle these things systematically. But also, new legislation and guidance is coming out faster than we can fully comprehend the previous. And, so one thing at play here is, I was in a position for a couple clients a few weeks ago or really even this last week, where I was ready to apply for forgiveness. And if I would have done that, I would have sold myself short for some of my clients, because there's a huge chunk of money that can get forgiven under the 24-week program. And so I think once the June 30th deadline passes and they close the PPP applications, kind of close the door on the program, hopefully we get some sort of, hey, this is it, right? As the legislation that's out now, it's going to stand, it's going to be what it's going to be, and then people could make decisions with all of the facts. And I think the banks are kind of just taking that stance, just waiting it out.
Okay. Yeah. It's not surprising, I guess, given probably the general exhaustion from the front end and, 2 or 3 months worth of consistent processing of these loans, that they're seeking some kind of break and at least a better idea of where we're going to head. But also very good advice on transitioning from the 8 to the 24 week covered period. Now, I will caution, correct me if I'm wrong on this, the only downside on that is going to be that you don't have the flexibility if, for whatever reason, you were desiring to terminate employees, correct?
I'm sorry, you just cut out on me for a second.
Nope. That probably means I cut out on the listeners as well. So I was going to say the only downside of transitioning from the 8 to the 24 week is that you don't have the flexibility to terminate employees if you feel that is necessary, correct?
That's tough. So I'll say the full-time employee clause is one of the most difficult. It's that aspect is one that I actually don't fully understand myself yet. It's kind of one of those things where we get those numbers in front of us and we'll figure it out. But I would say if you have a significant or enough mortgage, utilities, lease payments to take up the other 25%, the 8-week period might work for some people. Anybody that is a sole proprietor, even shareholder owners that have $100,000 in compensation, they're going to want the 24-week period, or else they're going to be capped at the $15,385. So
interesting. Okay, that's good to know. And with that, are we missing anything here? I figure that's all the content that I had typed out, at least. So yeah. Jason, anything else to add?
I don't think so. I think I added everything as we were going through it. And again, in a couple months here, I'll probably have plenty of stories for you about how things are going. But at this point, it is where we are.
Yeah, and I think we'll plan on doing another one of these here in a couple of months once we have a better idea exactly what that process looks like, so that we can literally attempt to handhold some of our listeners through it. As much or as easy as we can make this for you. That's our goal. Jason, Absolutely. If people want to get a hold of you, how can they do it? And I'll include this contact information in the show notes as well. But what's the best way to contact you?
Sure. If you want to send me a direct email, you can do it at jason@monthend.com. If you have a specific tax question or something like that, that would be great. Otherwise, you could inquire with us through the website, just monthend.com, and we'll put you in touch with the right person.
Excellent. And like I said at the beginning of this, you guys have been absolutely incredible. Buildertrend clients are literally their sole focus. The residential construction industry and smaller GCs are your sweet spot. So if you have some questions, whether it's about how taxation applies to your business or PPP or anything along those lines, reach out to Jason and the folks at Month End. They'd be more than happy to help you. I know they're always looking for fantastic clients, and if you're with Buildertrend, even better. So Jason, I really appreciate you joining me today.
Yeah, thanks for having me, Nick. Appreciate it.
Absolutely. And thank you so much to all of our viewers for listening today. Again, if you have any questions whatsoever, don't hesitate to reach out to Jason. Hopefully we'll be able to help you out. Thank you so much. Have a good one.